Hey everyone, welcome back to Inkmatic, back here with another video. Today we're going to be going through the Trading 212 portfolio update. Yes, it's episode 70. We've done 69 episodes prior to this. I can't believe it as well. So I've had a couple suggestions to use the web app from my last video, and yeah, let's give it a go. I'm open for, innovating and giving it a go. So yeah, let's give it a go and see how this performs. I think going forward, I really do like recording it on the desktop. Just gives me multiple screens to work through when recording this video. And yeah, hopefully I can add additional insights to these portfolio updates, such as news, etc. And yeah, this is the first one. Let me know in the comments down below if you've got any other suggestions that I can include or try to incorporate in these videos. Let me know in the comments down below. So today it is the portfolio is now at £13,160.04. I've invested £11,217.23. Returns at the moment is £1,942.81. That's 17.32% in the green. There are a few things to note about this. I have only deposited just under £11,000. So the rest of it is pretty much profit, which is actually really, really cool. And I think it's a great return. And the second point is, I don't think I'm going to get anywhere near the ISA utilization this year. Unfortunately, I've only deposited £5,789.29 this year. And I was planning to add some more to this and hopefully get to around 9,000. But I completely forgot about the lifetime ISA. So I've had to max that out this week as well. So hopefully I can get to about 4,000 on that and maybe 6,000 hopefully by the end of March. Get to 6,000 on this for total ISA utilization and max out that lifetime ISA. That's the goal for me. So yeah, let's dive into the portfolio now and see exactly what has been going on. So Airbus has actually been doing really well. On the week, I think it's broken even roughly around where it started. It's up, well, it's down 0.01%, which is basically a penny or 1 euro cent, which isn't actually that much. I've got 5.5 shares and my average price is at $60.86. Which is, I'm actually really happy with that, and I think it's great. I am up 53.18%. I'm chuffed with that. It's definitely going to be something that I'll be keeping for the long term, especially when there's only a duopoly in the airline industry, well, commercial aviation. You're either going to fly on an Airbus or it's going to be a Boeing. And right now, I don't fancy flying on Boeing because those planes keep going wrong. Yeah, so I've got 5.5 shares in Airbus and I have 5 shares in Boeing as well. So let's go to Boeing and see how that's doing. On the week, it is up 5.27%, which is actually really good. The current share price at the close of Friday is $223, which isn't too bad. I think it can definitely get up to 300, maybe pre-pandemic kind of thing. So I've got just over 5 shares in this. Average price is $173.84. I am up £117.43. That's 17.03% in the green. So yeah, I'm pretty happy with that. Unfortunately, there we go. We can see the FX impact right here. So £61 of it is taken away by the FX impact. That brings me on to the next thing that I want to talk about quickly, is that Trading 212 has recently announced some charges to the platform, and I think this is just to keep it stable, as they have seen an influx of new people wanting to sign up. So at the moment, if you do want to sign up to Trading 212, you're probably going to have to join a wait list. And if you do want to sign up to it, you can use my link in the description. And when you sign up, deposit £1, you'll get a free share worth up to £200. I'll also get one. So that really does help support the channel. The second point I want to talk about is with Trading 212, they have announced kind of a deposit fee. And this is only for funding methods that are not bank transfers. So with bank transfers and instant bank transfers, they are free. However, if you use a debit card, you get the first £2,000 free. And then after that, it'll be at 0.7%, which is actually really steep. And personally, I would rather use the instant bank transfer in my opinion, because it doesn't cost anything. And it's a couple extra steps. With my bank, all I've got to do is add my password to, confirm the transfer, and that's all good. And usually it comes in like after like maybe a minute, 30 seconds after you've made that transfer. However, I have had an issue in the past where it has taken 5 days, but that was just an anomaly. That was just an anomaly with their provider, which had a problem with their connector. But, I haven't had a problem since then. So I think it's pretty stable. And yeah, well, it's pretty decent for free, I guess. So, yeah. And the most recent one is the currency conversion fee. And this is going in effect early April, and they're going to be charging a 0.15% fee for whenever you buy a stock or sell a stock in a different currency. So for example, like my account is in Great British pounds, and if I wanted to buy a US or Euro stock, I'll have to pay a 0.15 FX conversion fee every time I buy and sell. So if you do buy and sell a lot of US stocks on a frequently basis, or Euro stocks, well, stocks in a different currency, then that can add up quite quickly. However, when you compare it to the other commission-free brokerage, Freetrade's fee is actually 3 times the amount that Trading 212 will be charging. Freetrade's fee is 0.45%. So yeah, 3 times more than what trading. So I still think it's still really competitive compared to the rest of the platforms. However, if you do want to buy a lot of US stocks and be buying and selling them on a regular basis, then you might want to check out Stake, where the account is in the US dollars, and the only time you pay the FX fee is when you add funds to your account. And that could probably save you quite a lot if you are trading on a regular basis. They have a fee of, I think, 0.5%. So it's a little bit steeper than both Trading 212 and Freetrade, but it's a one-time fee when you add or withdraw cash, rather than every time you're buying and selling, you're paying that fee. So it's just worth bearing that in mind. All links are in the description as per usual. Let's move back to the portfolio update. A couple of things that I have purchased. I've kept buying Churchill Capital. I've purchased another share this week, and just to bring my average price down, I've got a total of 3 shares in CCIV. Average price is at $28.85. I am down £8.85. That's 14.35% in the red. I do think hopefully this will go up. It was kind of spur of the moment. Cloudflare is one that I'm actually really surprised with, to be honest, because it on the month it is down a lot. It is down 21.65%, and I can't really figure out why it's dropped so much. Is it because the economy is starting to recover and people are starting to come out of lockdown? Economies have started setting end dates for these lockdowns for the economies to open up and reduce the restrictions. Then yeah, I can see Cloudflare dropping a little bit, but I think Cloudflare is here to stay, and this should really be going up, to be honest, because most companies are going to be starting to work from home, etc. Buying online is kind of the norm now. So yeah, I've got 15 shares at the moment. My average price is at $17.84. I'm up 240% still. That's £511 in the green. So let's have a look and see if there's anything in the news about Cloudflare. So let's take a look at the analysis right here, and it's still a buy according to these analysts on Webull. 50% say buy, 31% say it's a strong buy, and only 18% say it's a hold. They've got analysis ratings, price targets of around 105 at the high end and the lows of 75. So it is well below all these ratings, which is actually kind of interesting. Order flow, let's take a look at that. A lot of it is pretty much negative. Corporate releases, financials. So if we look at the financials on an annual basis, quarterly, so pretty much all green except for here interest income. I want to know Cloudflare named leader in DDoS. So yeah, I'm not really sure why Cloudflare is falling. I'd love to know if you guys know why it is falling. It would be really interesting interesting to know why. Now let's move on to energy transfer. So with energy transfer, it is I feel a little bit stupid, to be honest, because I did sell it at around 70 to buy Tesco's, and then when I went to buy it back, I hesitated too much, and now it's at $8.15, which is insane. I've been buying a little bit here and there when it drops to around $7.90ish. So my average price has been creeping up at $6.89. Sell price is, well, I've got 406 shares. My average price is at $6.89, and I am up £321 and 6 pence. That's 15.55%. So I'm pretty happy with that overall. I did receive a dividend on these guys, a total of £47 and 38p. So with that, I've reinvested that. I don't think I'll probably put it into energy transfer. But that's pretty decent, I think, and I'm pretty happy with that, hopefully. But that was based on 440 shares. I've only got 406 at the moment. But then when we look at Webull to see what, if there's anything interesting in Webull, let's have a look. ET, energy transfer. Here we go. In terms of order flow, there's a lot of buying going on, fairly stable. Let's have a look at order flow. So a lot of them are green, except for this one here on the 3rd of March, where there's been a lot of selling going on. In terms of analysis, it's pretty much a buy. You've got 43% buy, and then you've got another 31 that's a strong buy, and that's based on 16 analysis. So that's decent. Highs are around $16 in terms of price targets, and the lows around $7.50. I personally think it's around the middle, around $10. It's a fair value, I think, in my opinion. But I've said that in the previous videos as well, that I do expect this to be about $10 stock. So I will be looking to buy some more of this as soon, maybe in April. Hopefully I can buy some more by the end of March, but we'll see how that goes. In terms of financials, it's not doing too well on a quarterly basis. Total revenues are down year on year across the board, which isn't a good sign, but I can understand why, because as the economy is in lockdown, you are not going to see as much demand for oil, because that's their core business, is the pipeline transportation of petrol, I guess, oils, and gas, I think. Yeah, as the economy is kind of in standstill, everyone's in lockdown, the demand for those kind of fuels are going to be less. So it's definitely going to impact their business, I think, in the short term anyway. As the economy starts to pick up, we should see these numbers improve. That's just my opinion. Obviously, do your own research on that. In terms of news, it's still underperforming against the market, so that's a slight concern. So, but I'm still confident that they will bounce back, and I will be buying more. I just want to know, how much is 40 shares? 235. So potentially I could buy another 40 or 50 at the end of this month. Moving on to, let's have a look at Main Street Capital. It has also been doing really well this week. It is up 0.14%. What I thought it was doing up, doing really well, because it hit highs of $37.96, which is almost $38 when you come to think of it. And I'm like, wow, I do want to buy another 20 shares, so round this up to a nice 100 shares. But it's probably going to take me until end of April, maybe early May. Well, end of May, maybe, to get to those numbers. I've got 80 shares at the moment. Average price is $34.55. Return at the moment is $125.49. That's 6.29% in the green. And I'm green on both the gains and losses section and the FX impact, which is fantastic. Really chuffed with that. Super happy with it. And yeah, it's definitely a nice little income earner for me. Should be bringing in about £10 a month, but we'll see. Hopefully, fingers crossed, I will let you know when the next dividend comes in. Moving on to National Grid is another one that I've been purchasing quite a lot in. I've got a total of 100 shares in total of this. I did say in the previous one I was going to buy the additional 3 to make this to a nice 100, and that's what I've done. I've got an average price of £8.33, which I'm really happy with. I'm down £5.56, which I'm not too happy with, but you know, it is in its downward kind of dip phase, so I'm fairly happy with it. It's going to be definitely one of my long term stocks, so I'll be keeping this for at least like 10 years, I think. So with Persimmon, they actually announced a dividend, I think it was about £1.25. So I'm pretty happy with that. I've got 7.5 shares at the moment. My average price is at £21.65. Returns at the moment, I'm up £55.58. That's 34.23%. So really happy with that. And yeah, it's something that I do want to be building on for the long run. Realty income has had a bit of a red week. It is down 0.6%, which isn't much, but I have used this opportunity to buy in a dip, and I have purchased an additional share and a bit, I think I have. So average price is at $60. I'm down £52.53. That's 4.54% in the red, both. And the funny thing is, the FX impact is absolutely destroying me with a negative £51. Moving on to Walt Disney is another stock that I've been buying, and I did buy in a dip, at least a bit of it on a dip anyway. So I've got 1.5 shares at the moment. That's average price at $138.10. I'm up £49.04. £49.04. That's 31.11% in the green. Pretty happy with that. And I do think in terms of Disney, it is going to be a long-term stock for me. I do think, let's have a look and see what it looks like. Disney, here we go. So with Disney, so there is quite a few like positive sentiment about, you know, IMAX, CEO, blockbuster summer season. People are screaming to come back to the movies. I don't believe that, but if that's the case, then yeah, that's fantastic news for Disney, especially if their parks do open again. I'm not 100% sure if they're open right now, but if this vaccine is working, it's going to be a huge boost to Disney. You know, now that they've got their Disney Plus content is definitely expanded. I've recently seen that they've got a lot more movies like Die Hard and stuff like that on there, so it's not restricted to Disney only content, which is great. So yeah, I do think Disney is definitely going to be shooting up. I do think it's probably going to be about $250, $300 stock. So I do want to start buying a few more shares in this at some point. I'm going to slowly be building that up. If we look at the analysis, you know, there is a total of 29 analysis with 55% say buy and a 20% say strong buy. So, you know, it's pretty decent. You know, top price target's 230, a low of 124. So it's more towards the mid around 205. But, you know, these are just predictions or targets, nothing really to scream about, and it's nothing really certain. So it's just what analysts think, which I somewhat agree in this case. So yeah, I think overall Disney is something that I will be looking into buying a few more shares in this. And I guess the roundup for this is this week I've added a total of £194 in buying shares, which isn't much, but it is I think a decent amount. And in this week I received a £47.38 from dividends from Energy Transfer. So let me know if you like this setup with using the web app. I'd love to know what you guys think. But yeah, that's it for this video. I hope you enjoyed it. Don't forget to subscribe to this channel, like this video, check out my Twitter at Inkmatic, check out the blog inkmatic.com, and don't forget to check out those referral links if you are interested in trying any of these platforms. And you can get up to 400 and something pounds of free shares if you sign up to all of them, in the links in the description below. But yeah, that's it. See you in the next one, guys.